Why and why and why? Why should you trade today? You should not trade today. Today sucked for trading. And if you suck at trading, that's probably why you traded today. Please look at your news. Please. I dare you to look at your news. 10 a.m. ISM Manufacturing, PMI. Not a huge slippage, but it is something important. And then, my favorite, my personal favorite, 11 a.m., Mr. Powell speaks. With the federal release, you could watch it live, you could watch it anywhere. And he also speaks again at 2 p.m., okay? So, if that's not good to know, then I don't know what is, all right? Let's dive into it. So, what we notice right off the bat, and I actually do want to highlight what I had. Oh shoot, was it yesterday? I think it was yesterday. Let me open my notes because I'm pretty sure I had standard deviation down here. Am I right? Where was the standard deviation of this one? Wasn't it like something? Shoot. Where's the market structure shift happening? Was it this one? Yes, it was. So swing low. It was that one, right? Swing low. Standard deviation. Pretty sure it was this one, no? Yeah. Well, let's just go ahead and say that. Oh, my bad. Let's just go ahead and say that nothing in the marketplace is algorithmic, right? Nothing. Nothing's algorithmic, all right? It's just random. It's random that price somehow, I don't know, from this standard deviation runs up, consolidates, runs even higher, trades right to the consequent encroachment of the standard deviation, comes back down, and then we trade up, and we completely blast this -4. So, if you remember yesterday, which is probably in the notes, which will load here, if you remembered yesterday on what we took a trade on, oh yeah, so this was the standard deviation yesterday. Oh, no, this was today. Pretty sure this was today. This was the trade yesterday. If you remember what we talked about yesterday, right? Our entry was there. We did a top-down analysis on it. And I said, if you were here, I don't know, entered right up here, whatever, somewhere over here. You had your stop loss like low. I don't fucking know where it was. Just guessing it. But if you were a smart trader, your target could have been up here. I mean, if that doesn't give you a trade, I don't know what does. You're not even in drawdown for a second. You're not even in drawdown at all. If you got, supposedly you got a good entry. Letting you know that was the standard deviation from yesterday. Just a nice little reminder that was that. Anyways, let's talk about today, shall we? Let's go to the 1 hour. I think it's pretty special. So we open today right here like this. Okay, so what do we notice right off the bat? We have this pretty pretty major expansion move down, right, that we traded to, yesterday for this move up. And then after this move up, right, I'm expecting a higher move up, right, to take out this high and to take out the standard deviation, which is also up here too. So I'm expecting a buyback. Now, obviously, I'm looking for price to somehow and want to come back down, okay, into this area to push back up, right? It's not just going to randomly come up like this candle, right? Some people will be mistaken and say that this candle is like the breakthrough, right? Because we closed above this high. And what that actually creates, though, is if you really look on the 1 hour, is a market structure shift, right? You had the swing low down here, so the lower low, and then you had the higher high that made a higher high, and then this got broken through. So what I did was I drew my OTE Okay, so again, swing low, swing high. Actually, this was a swing low here, but you could also put your OT down here too. But I put mine here because it's on the 5 minute. You'll see what I'm talking about. So, and again, do remember this is a market structure shift happening on the 1 hour. I'm not personally taking a position on the 1 hour. This is just for bias. Okay. Now, what do I notice? At first, what I notice is that, yes, if you put your OT down here, if you have noticed, which I first did, you have your OT, fair value gap, 5 minute, 15 minute, whatever. You have a bunch of PD arrays here that are being used. And I wanted to see price actually come down all the way to trade this area. And then I realized the actual swing low on the 5 minute is right here. So the OT was a little higher than expected, which is still, I mean, if we take the range of this wick, I'm confident. Oh, that is not a range tool whatsoever. It is this that we want, and we want the range. Pretty confident that price would want to trade to the consequent encroachment, which is also where those PD arrays are. Unfortunately, we did not get that today, but I know why. It's because of, all the news that that we were not only anticipating, but that we got released. So, with this being the case, I just want to maybe okay, I can't. Okay, never mind. So yeah, notice market structure shift. And then, the strategy, my bias is that it wants to come back to the OTE. Inside the OTE, is there any PD arrays that could be watched out for? Anything of that sorts. Do notice that, again, not this one. We do have news at 10 p.m. My bad, 10 a.m. We also have news an hour later, which is the Fed, the Mr. Powell, and that's usually pretty important. And knowing that he speaks twice, that could be oh, I didn't even know I could do this. Comms. Huh. Oh, I just leaked my email. It's whatever. Anyways, this over here creates a market structure shift. Then we have an OT that is formed with an optimal trade entry that you could take off. Now, my personal entry point would have been on the 5 minute, right? So I wouldn't want to trade and look for a trade on the 5 minute, okay? So noting this, I want to see what price does. And notice, right, the golden zone here, the newly updated OTE, you can see there's a very deliberate fair value gap that happens right here. Oops, just one down right here. And that's the fair value gap that we get here, okay? Any other PD arrays? There's an order block here, but it's a very large order block, which I want you to also notice, please, that it gets respected very nicely. Okay, so that's one thing. This order block that I didn't mark out because I didn't want to cluster your eyes. But that's one thing that gets respected, and that will be important in our entry if we have an entry, because I did not trade today, but you in a way you could have traded this. I wouldn't recommend it. Again, these are the OTs down here, which I thought were going to be traded through, but it's always good to have them. Now that we know that the price did not come down to those levels, we can delete them. We don't need those anymore. What do we like to do? We like to mark out the New York true open, which happened right around down here, and we opened market at 9:30, which is right here on this candle. So what do we notice? We notice that it's trading under New York true open. We come down to this 5 minute order block, tap into the price. Also do notice that we are in the 0.5 zone of the range, okay? And the range I'm talking about is obviously from this swing low to the swing high, okay? Nothing has been broken quite yet, so this is the current range. Once we're under this 0.5, that means we can start buying. If we're above, we can start selling. Remember that. That's going to be important, okay? Now, on the 5 minute, we're above the 0.5 and we're under the New York true open. So price is in kind of like in a limbo, Very, very weird limbo. It creates a higher high here, that then creates a low, and then we trade up, and then this is 925, then we 930, so it's already volatile. 930 opens, we come down, we sweep this consequent encroachment of this order block, 5-minute order block, and then we come down and tap into the OT 0.62 area. What I was expecting is a move lower, actually. I was expecting for this candle to actually move quite a bit lower. And you might know the reason why. It's because from my strategy and what I've been trading is you want price to come at least near this golden zone, right? Rejecting this right off the bat, yes, it shows you very bullish price action as it's getting rejected and buyers are stepping in. But that also tells me uncertainty. That tells me that if price is already rejected so soon, that means that it will probably reject somewhere else to, come back to that level or trying to reprice it or go lower. So that in my mind gives me uncertainty. Okay, so at the time I didn't want to trade this. Neither should you. You shouldn't have traded because remember, 10 a.m. is when we get news and 11 is when we start the speech. Okay, so very small window. Would not be able to trade this, but here's what happened. Market structure shift happens here. I hope you notice how that happened. Okay. Now, when this happened, let's remove this for a second. When this happened, this buy in from this huge uprise to the market structure shift what happened under the 0.5 of the zone. So that means it happened in discount, which means that the buy-ins and the buyers were correct and were valid, right? So this was a valid buy-in, right? So price is going to go up, is going to trade the market structure shift. And so now it created a new internal zone that I want to be aware of if I want to trade it, right? As price wants to reprice and then reaccumulate. Now, the only problem is that I would have taken a trade today if there wasn't Mr. Powell speaking. If Mr. Powell wasn't speaking, I would have taken this trade. But he spoke, and it caused price to do this, and I didn't like that. So I just stepped away from the screen and did not trade. So what exactly am I talking about? You have the swing low here, and then you have the swing high created, okay? Now, the current, what I'm trying to test here and what I'm trying to see is this market structure shift. The current range of that swing high is this, because this is a swing high here, right? But it gets broken through to this higher swing high. So if you do an OT, for example, from this swing low to that swing high, okay, which is valid, you would notice, let me just put this down here, okay, that the only time it gets respected is on this candle. And that's when FOMC Fed Powell speaks, okay? That's not a huge worry because no one's trading this, okay? But the biggest worry for me was this entry, because you can't take an entry here. And if this is already breaking through my OT, that means that if I do the higher range here, that means it's just going to go up and it's not going to respect, it's going to trade right through it, okay? So the OT in this case was kind of useless to me in a way. What was interesting, though, is if you drew a range, right, from your swing low here to that current swing high up there, okay, this price action right here that swept here is in discount of this internal range, but this external range also, right? So anything, this wick right here, as you notice, is all in discount. Not sure why that's flipped. Should be something like this. There we go, that's better. Right? So it's both in discount. So then, if you really wanted to play it smart, you would have looked for a PD array in here, right? And so the first one that comes up on the 3-minute, right, is a 3-minute fair value gap. That gets blown through, okay? So then maybe the 1-minute. Let's see if there's any PD arrays there that we can maybe spot anything down here. Is there anything down here? Nope. Just a big order block here. Little order block right here. And price just does whatever it wants. You know, it just sweeps right through it. It happens. So if you're watching this live and you wanted to take an entry, you could definitely go for it and risk it. But if you look on the 3-minute, look at this doji, right? We had a doji. This candle traded all the way down. It is 10:30. We did have news get released at 10, right? Very bullish news. And I forgot to mention this. I completely went over. The bullish news, why was it bullish? ISM manufacturing PMI. Let's see what it says. The actual price, if greater than forecast, means good for currency. Was it greater than forecast? No. So that means it's bad for currency. If it's bad for currency, that means DXY goes down, and that means that SPX does the opposite. It goes up. Hence why we got the bullish news here. Bullish news takes out some resting engineer liquidity right here and there. Not the most important, right? Comes back down to where? And why does it come back down so low? After a huge displacement, it needs to reprice to the current position of price where it actually needs to be. And like I said, with the market structure shift, right? This is it's a small range that even if you draw your OTE here, I wouldn't want to trade this because it's such a news event driven. It's such a news driven candle and price action that I wouldn't want to trade this at all. That's that. Okay. Then you wait, and then 11 hits, and then Mr. Powell speaks, and you get this whole candle shebang. Boom. Okay. Nice little down candle, comes down here. Yes, maybe it hits an OT, whatever, it's still in discount. It was kind of a shit show, right? The entry you could have taken, and that could have been nice if this wick actually respected this this OT. If this wick, and I'm telling you right here, if this wick right here, you see this? If that little wick right here happened just above, I would have taken an entry. It would have been valid. I would have taken it. Right? Because of the price action. And why is because you could actually enter here, or you can enter. Don't know why it's short. If you could enter here, where is your stop loss? It would be below these lows. Pretty simple, right? Below those lows, right? And if your entry was like up here, for example, where's your stop loss? Okay, maybe it's like this. Okay, yeah, you got stopped out there, but I would say my entry is always like on the 0.7. So where's my stop? Below these lows. That didn't go through. Now, this goes up there. If Fed Powell scared you and that candle closed, and I mean closed, not traded, closed under this previous low, then I would have been concerned and got out of my position before it even hits my TP, or my stop loss, my bad. Right, because mentally I know that Powell is powerful. Powell is powerful, and he can manipulate price, and price will do things that you will not expect in regular markets. That I can tell you. And other traders will agree with me. Trust me on that. Okay? So, I'm not going to make a huge video out of this because this really, frankly, it's not tradable. To some people, it might be gambling if you just enter here and you get lucky. But to me, I need everything to be specific to the dot, and I need everything to be respected to the dot. And talking about respect to the dot, look at this. You remember when I said it was coming to where? Right? It goes up and then it goes down to where? Remember this 5-minute order block that we marked out, and it gets respected, gets traded through, closes everything above? Look what price does. Let me go on the 1 minute to be even more precise because I like these. Go ahead. Tell me that the market is not algorithmic. Go ahead. I'm waiting. I'll wait all day. You're telling me that this whole move happened because of this? Come on. Come on. How is this not obvious? I've been trying to tell you, but you don't want to listen. That's fine. Just wait. Keep using trend lines. Go for it. Anyways, could have been an entry. That's if you're the type of trader that takes risks like that. I didn't take an entry. You know why? Boop. Oh, but French trades, why didn't you trade today? Boop. This is why. Because there's news that is so impacting to the market that I don't want to put my position in a risk where it might seem like a good trade. It might be a great trade, but that price can quickly change because of one man and one number. That is it. That's all. I would rather not take a trade today than lose money. That's the quote I'm going to end off with you. Before I leave you, actually, I forgot to do this yesterday, but let's go over my strategy, right? What am I doing? Okay. This might take a while to find. Never mind. It's right here. Okay. So take notes, please. And I'm pretty sure I posted those on my TikTok. So if you want to take notes on there, go for it. But this is going to be outright, like, just with you right here. So the current strategy I'm using right now is involving the quarterly theory and the ICT concepts. Now, I've been using the quarterly theory here and there, mostly to determine where manipulation happens and where I can use the displacement to take a trade before the market structure shift, right? So I use both. What you don't want to do, like I started off, was just focusing on the quarterly theory. Another big thing about the quarterly theory is the New York True Open, or the True Opens in general. There's the Asian True Open, there's the London True Open, and there's the New York True Open, okay? All three are the quarterly theory's main factors, which takes time to understand, but when you do understand, it is very helpful and very, very helpful to understand where the order flow is and where it's going, okay? And ICT concepts, this is probably the best one, right? So the OT is a huge one I've been learning recently. Standard deviation is a huge one also. That's not taking the trade. That's more of like analyzing the trade after I've taken the trade and then, predicting the outcomes and resting liquidity to target for take profits. Market structure shifts, right? Needed a little more research on that, but that's what I'm using right now. Fair value gaps, huge one. Okay, so all of those are basic. Okay, you can learn this in his mentorships. That's what I did. Take notes, man. Take notes and learn and watch. Okay, so what's the first step of the strategy? And there are some stuff that I left out, so you don't have to, but there's some stuff that I left out that's all in my mind right now. I can give you an example right now, right? Not trading before 10. Right, that's my mental rule. It's not in this strategy because it's a mental rule that I have set down and I'm testing my discipline. Hence why it's not in there. So what's first? Have a daily bias on the market. Now, what do I mean by have a daily bias? And I might have to rephrase this. Have a bias. Okay, it's important, and you'll hear some traders say don't have a bias. Bias kills. While I do agree on that, I do want to point out that bias helps in a way, right? If you have a bias towards a direction of the market, you will be looking for entry positions or inefficiencies or anything that can back up your bias, okay? But you can do it vice versa. You could say, I have a bullish bias. What is making price want to be bearish today, right? Because I'm so bullish, I'm like focusing on just bullish things. What if it's all bearish all along? Can I look for bearish PD arrays that might interfere? And that's how I do it. So it cancels out. And so if there's more leaning towards one side, then I'm like, okay, I might have to change my bias, and then I have to rework everything. Usually, and I'm pretty sure, yeah, I said this. So watch the news and analyze other stock price actions. I don't usually do this. Watching the news is something I always do every single morning. New York, Wall Street Journal, CNBC, CNN. There's a bunch of other news channels that I use. Lots of information going around. Now, I trade the S&P 500. So that has the top 500 companies in the world, right? That's a lot. Or not in the world, in the New York Stock Exchange. So that's a lot. That's a lot of companies to look for. Most of those companies are tech companies, and that's where you want to look at the stock price action, right? Recently, Tesla released their Cybertruck. You want to look at the sales, maybe not the sales currently because it's not out to the market yet, but you want to look at the price of Tesla because buyers or sellers are stepping in to buy Tesla or to say, hey, this thing sucks, I'm going to sell it. So you want to look at that, right? Be aware. Be aware. Wake up early or the day before to plan out. Yeah. Wake up early to do some analysis. This is like how to get your bias. So tonight I would do an analysis for Monday. I would come back on Sunday to revise that analysis. If I got some things wrong, maybe I was tired, I missed a few things, I would come over it, review my bias, and then maybe add or subtract a few things, right, to make it better. External liquidity is the liquidity that is placed on the time frame above the internal liquidity. Okay, so you might not understand this. I get it. I'm not going to go into detail. Analyze the monthly, weekly, and then the daily for your bias. Your daily bias will change because it is more volatile to big moves or reversals, but all comes down to the monthly bias. I'm glad I said this. It all comes down to the monthly bias. And you can go down 3 months, 6 months, years, 3 years, right? What ICT traders do and especially are focused on is the monthly. That's like the big boss. That's the big picture. So let's look at the monthly, right? Because we're in the 5 minutes, but what about the monthly? What's the big picture here? Looks like we're bullish on the monthly. Last month, November, November, a little bit of October, we were extremely bullish, and now we're continuing up. And so now, what's going on? Well, there's some liquidity up here that's resting, and then there's more liquidity up here, right? And so maybe that's an area of, maybe an area of interest, right? Can it push up above these highs and maybe above this high? And I want to see how price reacts above this high. Right around here. So let's actually make this pinpoint perfect. Let's change the color. Let's change the size. Let's make it dashed. And I want to see how price reacts. And so let's see how close we are to the monthly. Oh, it's right here. It's right there. So I betcha in the next 2 weeks or so, we're going to see price trade into this. I'm quite certain, actually. Okay. So that's the bias rule, right? Always have a bias, mostly on the monthly. And then what you do is you go from the monthly to the weekly to the daily to the 4 hour, and you do every single time frame unless you get to the 1 minute. Okay? Mark out Asian, London, New York session highs and lows, external highs and PD arrays. Yeah, you could read out for yourself. This I have an indicator that does this. Wait for MSS. Could also be unicorn or institutional order flow. Wait for brick structure, 15-minute whatever, market structure shift. And this is where the real thing happens, right? I took a lot of notes on this. I'm just going to read it out. Use the quarterly theory and the ICT concepts to take your trade. The first thing that you should be notice is a sweep of liquidity, buy side or sell side, preferably high time frame. Use the weekly or daily to define those areas / PD arrays. Mark everything. Quarter 1 and quarter 2 should be accumulation and manipulation. Wait for the accumulation and see the manipulation. Look at price action, please. After a sweep or a reaction off a high time frame PD array, you should wait for distribution. Distributing above a high, which should you wait for a market structure shift. If not market structure shift is created, close your laptop and take a break. If there is a market structure shift, be careful and mark out the mode, the most eye visible fair value gap, then the small hidden fair value gap, if any. Use your OT from the swing low, swing high, swing high, swing low, and mark out any PD rate, if any. Crucial part for the entire. Know the order flow and where prices go trading. Watch the price action around the OT level. Look for SMTs on NQ, QQQ, ES, or any other. Look at DXY. Is it above or under New York AM True Open? If under, buy. If above, sell. After identifying the OT level and PD arrays, enter your trade. Mark out the standard deviation. If long, swing low to swing high. If short, swing high to swing low. Target -2 to -2.5. If in a short position or in a long position on a swing trade, go for the -4. Mark any liquidity that is near those levels and identify how much risk is needed and how long you want to hold and where your targets are. Test this out. When in the trade, watch and watch. If price comes down into drawdown, lock in and pay attention to the volume. Do not be scared to close. Do not be attached to your fucking money. Backtest every single day. Remember to never trade on red folder days or FOMC days. Never trade chop nor shit price action where nothing is moving. Don't trade before 10 a.m. Only watch price action. You can trade, but don't hold as price will run through your shit. Keys to daily bias. Every day bias is unrealistic, determining the likely weekly expansion. It doesn't necessarily mean then the close of the next weekly candle, but instead where it will likely reach for. Give you the strongest bias. Look for obvious liquidity in the direction. Identify imbalances in price delivery top down. Focus on the high or medium calendar event dates and look for directional price runs during kill zone intraday. Well, that's a lot. That's a lot. So that was that with the strategy. That's what I'm currently testing out. That's what I'm currently doing. It seems to be working pretty well. I'm seeing this happen pretty often, and it seems to be a nice little reversal, right? Seems to be following standard deviation all the time, basically to the dot. If not, it stops at a key high time frame level, and that's what I've been noticing. So I'll keep you guys updated over the weekend. If anything happens, I'll keep you guys updated. I will see you on either Sunday, Monday, or Tuesday. Peace.